welcome. You're watching Money, Money, Money. I'm Sumaira Abdi. Almost everyone I know, and perhaps a large portion of Indians, dream of owning their own home. It's just that security blanket in a world where few other investments provide the safety and comfort that real estate does. Or so we think. Real estate is no longer the promised land for investors seeking the highest returns, and for people buying their first homes, the experience can sometimes be nightmarish. So how do you navigate this tricky world of real estate investing? Roongta of Apnapaisa.com is going to tell us just that. Also with us today, we have two potential investors, Parul Shah and Gaurav Shah. Thanks so much to all of you for joining us on our show today. But let me ask you, are you guys already homeowners? Are you looking to buy? What's the case?
I'm a homeowner.
But are you looking to buy a second home?
Yes, I'm looking for investment in real estate.
What about you?
I'm currently staying with parents and planning to buy a home for myself. Also looking at an investment property.
Okay, so Harsh, we have two more potential investors joining the ranks of millions. But before I get to your questions, I want to ask you, considering the number of people who are now looking to buy their first or second home, would a first home even qualify as an investment, or is it like, almost a dead end where you're going to be staying and never going to sell it?
When we talk of real estate and we talk of investments, we must define what they mean. I think let's first talk of investment. When you're buying a house to stay in, I don't think that's investment. I think that's a consumption item. It's just a larger consumption item than say a car that you buy or the jewelry that you buy. It will retain value. Unlike say a car whose value will go down, it will retain some value. But just like jewelry is something which will retain its value for some time or for quite some time, the issue is that you're never going to sell. When you buy an under construction property, I think most people forget they are not buying real estate. They are lending money to the builder. Let us be very clear. For an indefinite period, with a hope that it will eventually, that lending will be replaced by a flat that they will get. Real estate means a house or a commercial property, whatever which is ready to be rented out, to be stayed in, to be used. That is real estate. When you buy under construction, it's not real estate. You are in the risky lending business.
That's quite a pragmatic way. If only more people would look at it that practically. Gaurav, you wanted to know about rented accommodation versus buying a flat?
Absolutely. See, there are some calculations which show that renting a flat and staying in it is a far better option than buying a house for yourself. Right? How far is that true?
This is a debate that I think our fraternity, the financial planning fraternity, likes to promote. Okay, and it's a debate that goes on all over the world. But if you look at calculators anywhere, over long periods, okay, you will find that probably renting out is probably, at least financially speaking, better than buying. The issue with these calculators is it does not take one huge cost into account. The cost is the social cost of not owning your own home. If you look at say a society like Germany, only 50% of the people stay in their own homes. The social pressure there probably is less. I don't know. It's just reflected by the statistics. There probably these calculators make sense.
That's true. Actually, in India, property is so closely linked to the aspirations that people have, and which is why even a phenomenal concept like reverse mortgage has just not been able to take off in India because of this aspirational value that a property has.
The other thing I had in mind was I already have a house where we are staying. I'm looking for investment opportunity. So how wise it will be to invest in another real estate vis-a-vis in maybe equity or mutual fund? Because I find mutual fund and equity little more structured investment compared to real estate where transparency is almost nil.
I think you've struck a chord with Harsh on this question.
The key, I think, to any investment, okay, is balance. Okay, just like having an investment portfolio. Now we're talking investments. I think having an investment portfolio that's completely equity does not make sense. Having an investment portfolio that's completely debt may not make sense. It depends on your situation. Definitely an investment portfolio that's completely real estate makes absolutely no sense. Real estate is a lumpy investment. One investment asset is a large value. You can't do it in pieces of 10,000 rupees or even lakhs. I mean, in India it will run into tens of lakhs. The liquidity is not, for example, like an equity. You can sell your equity or your mutual fund, you will get your money back in 48 hours, right? If you buy ready to move property, at least you will sort of be a little less prone to the kind of things that you have just mentioned. Fact remains, if you have a large portfolio, so only people with large portfolios can afford to have real estate as an investment, right? It should be a certain percentage. To say completely you stay out of it, I would not say so, but if you have a large enough portfolio, maybe a 20%, a 10 to 20% or a 25%, depends on your outlook, okay, you can allocate to a real, but for that you need to have enough money that after investing in that real estate, at least 3 times more you should have invested in equity, debt and gold.
That's true, actually, and I guess in some ways then property is like gold, it's just something you can physically see, it's right in front of you, and which is why it gives people some sort of safety. But carrying on this point forward, we've recently seen the SEBI clearance for the real estate investment trusts. Retail investors have a minimum investment limit of 2 lakhs, but is that really advisable? Would you recommend it to clients going forward?
Real estate investment trust, at least in the context of India, is like the fabled unicorn. We still have to see it, right? It hasn't yet come. And
but as a concept, do you think it would work for a retail investor?
So just let's look at it. Given it's going to be concentrated, right? And typically in India, real estate, residential real estate for rent is not a very big market. So typically this is going to be primarily be commercial. Liquidity very poor. Yields are, I think, okay, and then obviously they hope to make some money on capital appreciation, but the bets are going to be concentrated. They will have to take large bets. So a fund, say, of 250 crores or say 500 crores would typically have 4 investments, maybe have 5 investments.
Right.
They have to have a minimum of 2 investments, right? So they are going to take concentrated bets, primarily on commercial real estate, but they are going to have yearly yields or monthly yields coming in. So the investors will have income, not just capital appreciation. I would wait and watch, very frankly, if that is the advice. I would wait and watch and see how it goes.
Yeah, that's true, actually, and there's always this fear when you see concentrated investments, because even if one were to fail, it's almost capable of bringing your portfolio crashing down. But we need to take a very quick break. But up next, we'll talk about what are the common problems that people face when they actually step out to buy a house. The most common, of course, being construction delays. So how to tackle all of that is lined up next. Stay with Money, Money, Money. Welcome back. You're watching Money, Money, Money. We all know most of the benefits arising out of real estate investments, and which is why today we're discussing the pitfalls and ways to avoid them with Harsh Roongta of Apnapaisa.com, and also with us we have Parul Shah and Gaurav Shah, who are helping me quiz Harsh on this topic. But Harsh, I want to talk about under construction projects. You said earlier that do not consider it an investment. It's a loan that you're giving to the developers. Yet it is the harsh reality that almost 90% of the people are booking houses which are under construction. What is the recourse for people like these? Because even the biggest of builders are now causing delays.
Now this is a huge double whammy. First, you would have made some payments. On that you will have to pay interest, okay, and that interest, if you don't pay, your ability to borrow in the future is going to go for a toss, because your credit track record with the CIBIL is going to get spoiled. So you need to continue to pay interest even while that property construction has stopped or has started crawling. Second, if this delay goes beyond 3.5 years or 3 years plus, right, then, and if you're going to use that house for staying, then as and when the flat becomes ready, the limit for deduction, which all of us think is 2 lakhs, will, for that project which has got delayed by say 4 years, okay, that will only be 30,000.
You said that even if the construction is delayed, one will have to continue paying the EMI. Now I know somebody who has taken bank loan, the house was under construction, and because of some problem, some environmental issue, the building is demolished, and the bank is making my friend pay EMI still. So I mean, how do you handle this? How right is that?
Unfortunately, legally speaking, the bank is absolutely right. If you read the contract with the bank, that says very clearly that you have chosen this flat, this particular project based on your own, etc., even though it may have been pre-approved by the bank, and based on that you chose.
Exactly.
In spite of that, your liability to pay the bank is there very clearly. I think this brings out some highlight in our country. Typically for under construction flats, individuals normally don't buy in advanced countries. These are institutions who fund it during the construction phase. Only sophisticated investors invest in under construction property. Most regular people buy almost ready property. So I think this, it speaks of the enormous risk taking capability of the Indian investors or the Indian population, that I mean, based on a contract which we know is very difficult to enforce, we still lend money to builders to get our flats constructed. And unfortunately, in the kind of situation that you have just outlined, his liability to repay that loan, in fact the bank is now going to stop asking him to pay EMIs, is going to tell him, you please repay the loan, because the house no longer exists, it probably can't be built, and he has that liability. If he does not repay, he'll never be able to borrow in the future. Sounds unfair. That's the law.
So Harsh, tell me, in cases like this, especially where the large number of people are buying under construction houses, does it even make sense for them to have home loan insurance? Because in any case, it does not cover houses when they're under construction.
I presume by this kind of home loan insurance you are talking about if something happens to the property.
Yeah.
Obviously that is covered only after the property is ready. Okay, I think today we have a mindless spectacle of when banks issue home loans because their credit document says that he should buy a policy. Somebody is forced to fork out a premium for a property that's not there, and it doesn't cover anything. Till the property is ready, it doesn't cover anything. Not happening across the board, fortunately, but it is happening because of the mindless application of a credit manual that has been laid down. You're right, home loan insurance doesn't cover anything that happens to your property while it is under construction. That insurance the builder has to take.
So that's something that you need to also look out for then, if you're buying in under construction properties, that make sure the builder has insurance. Your home loan insurance is not going to cut any
But
ice
you
during
can't
that
take
period.
insurance for violating regulations and guidelines. There is no insurance company that will cover you for anything that happens to your property because the builder violated guidelines.
So Harsh, that actually brings me to my last question. What are the 3 or 5 key things that people should look out for in the agreement that they go to sign with their developers?
If you are going to buy under construction property, there are 2-3 things that I think. First is location. Okay, there is a general feeling that when it is outside the metros it will appreciate better. I would suspect that is correct, but I think the key thing is real estate as an investment is a very high effort investment. You have to continuously find tenants for your property. It requires maintenance. It's a high effort asset. So please have it in an area that you can actually visit and it is convenient for you. Second, notwithstanding that banks don't take any guarantee, but a project that's been say approved by 3 or 4 banks, I think that is a reasonable guarantee. It's not a legal guarantee, but if 3-4 banks are putting their neck on the line, the banks also realize that there are going to be defaults if there is delay in construction, so they are also careful. So if a project has been approved by 3 or 4 banks, I think that's a reasonable security. Third, try and buy it as close to the commencement, I mean as close to the occupation date as possible, rather than buying something where even the digging hasn't begun. And of course, the biggest thing is, should you invest at all in the first place? Does it form part of your asset allocation? If because of that you are flowing into this, and you take these three into account, you should do reasonably well.
All right, but really if you read between the lines, all it says is buyer beware. We need to thank you guys so much for coming in today. I hope it's been helpful, and all the best actually for your investment, and I hope that at least you guys don't have any nightmarish experiences that we spoke about. Thanks very much for joining us. Harsh, we request you to stay on. There's more left on the show. We need to take a very quick break, but still ahead is our viewer call-in segment, Can I Afford It?